Welcome, everyone. I'm Jeremy Yowie, ALTA's Director of Communications, and today we will be discussing ALTA's best practices, next steps, and what it means to your company. We've had a great deal of interest for today's presentation, with more than 600 that have registered for today's discussion. Before starting, I need to touch on a few housekeeping items. Copy of today's presentation was emailed earlier today to all registrants. If you didn't receive it, please email me at jyowie@alta.org, and I will get you a copy after the webinar concludes today. All participant lines are muted for today's presentation. If at any time you have a question, please use the chat box function, and we will address questions at the end of the webinar. And if we don't get to your question, or if you have follow-up questions, please send them to bestpractices@alta.org. And as an added benefit, today's presentation is being recorded, and after it's processed, the recording will be available on ALTA's website at alta.org/best practices. With that out of the way, let me introduce our speakers today. Joining us, we have ALTA President Frank Pellegrini. Frank is Chief Executive Officer of Prairie Title. We also have Chris Abbinante of Fidelity National Title Group. Chris is ALTA's immediate past president. We also have Dan Mennenoh, President of H.B. Wilkinson Title Company. Dan is a member of ALTA's Board of Governors, as are Frank and Chris. Also on today's call is Cynthia Blair, a shareholder of the law firm Rogers, Townsend, and Thomas. Cynthia concentrates her practice in residential real estate transactions. And all four speakers are members of ALTA's Best Practices Task Force, and will be able to provide some great insight into the development of the best practices framework, and really be able to provide some practical advice to how this will impact your operation. Rounding out our panel, we have Steve Gottheim. He is ALTA's Legislative and Regulatory Counsel. Steve has been the quarterback on ALTA's staff for essentially all things best practices. With that, Frank, I will turn the conversation over to you to run through the agenda and kick off today's presentation.
Well, thank you, Jeremy, and it's a pleasure and a privilege to be on this panel today and to work with a distinguished group of title professionals. We hope today to give you a full picture of our best practice efforts. We'll start off with a background in best practices, and then we will go through what those best practice pillars are. We will talk about the Best Practices 2.0, the most recent version, with some amendments that have been included since the very first publication of the best practice document. We will go through assessment procedures leading to the certification package. We'll discuss the work that's being done to develop a workbook as a tool for title professionals to use, as well as a policy building tool for members to use in preparing their offices and getting them ready to work within the best practices and work toward that certification package. And finally, we'll take your questions. And with that, I'll start with a little bit of background on the best practices. And first, let me say that the best practices are essentially an industry response to some very clear market needs. Those market needs, in turn, have grown from a very robust regulatory environment that we have seen over the last few years. You could say that basically best practices are designed to provide our regulated customers the confidence in working with us that tells them clearly that we meet certain fundamental business criteria. Now, to understand the creation of the ALTA Title Insurance and Settlement Company best practices, you need to go back in time a little bit because it's against the backdrop of certain events that the best practices can best be understood. As far back as 2001, the Office of the Comptroller of Currency stated that a bank's use of third parties does not diminish its responsibility to ensure that the third-party activity is conducted in a safe and sound manner and in compliance with applicable laws. A little further on, in 2006, the FDIC issued guidance raising the awareness of third-party arrangements. The FDIC did recognize that financial institutions do attain strategic objectives in using third-party providers, but that practice also presents risks, and those financial institutions needed to recognize the risks and implement effective risk management strategies. Then the crash came in 2008, and as a result of the crash, a flood of foreclosures inundated lenders and servicers. To handle this deluge of filings, lenders and servicers retained third parties to work with them to manage the cases. Unfortunate practices grew out of some of the activities in managing foreclosure cases, and these were intended to be time-saving strategies. They didn't work out so well, and the practices led to some pretty stiff regulatory initiatives. In 2011, you'll all remember that that several federal banking agencies announced formal enforcement actions requiring 10 very large banking institutions and other non-bank institutions to comply with certain processes and procedures. Those were called consent orders, and if you review those consent orders, they all contained a provision to manage, control, and supervise those third-party providers. A little further on, in early 2012, February 2012, the 49 state attorney generals initiated, in conjunction with several agencies of the federal government, actions against the 5 major mortgage servicers stemming from those unfortunate practices that I referenced earlier. That cost those 5 major servicers $25 billion. The settlement orders that were agreed to in those regulatory actions all contained nearly identical language to the consent decrees of the year earlier with regard to management, oversight, regulation, and acknowledgement of the activities of third-party providers. Of course, in April of 2012, we're all very familiar with the CFPB Service Provider Bulletin, which incidentally does not specifically reference title insurance and settlement companies. It was actually directed against credit card providers, but by virtue of the fact that we were not excluded from that bulletin, we have to assume that we will be included should the need arise. But that service provider bulletin and the mandates contained in that service provider bulletin, for the most part, reflect and mirror those earlier settlement decrees and consent orders. So it's really a reiteration, if you will, of some historic events that occurred long before the issuance of that service provider bulletin. Of course, it's the April 12th service provider bulletin that got all of our attention. To put the exclamation point on that bulletin, 3 actions, regulatory actions, in rapid succession in July, August, and September of 2012 against 3 major credit card providers indicated the resolve of the CFPB to enforce the service provider provisions of that April 12th bulletin, and that resulted in some pretty stiff fines a couple $100 million to Capital One and American Express, and just under $100 million against American Express. So, as you can see from this environment, the regulatory agencies are very much focusing on the activities of third-party providers and establishing those activities as the activities of the lenders directly. Whether it doesn't matter that that the services are actually performed by somebody else; they will be treated as the direct actions of the regulated entities. That is essentially the background that created and that drove the need for the best practices. And now I'm going to turn it over to my good friend Chris Abbinante to go through what those best practices are and describe them a little bit more in detail to you.
Thank you, Frank. And let me echo Frank's words earlier. It is both a privilege and a pleasure to be associated with our industry and those that make up our industry, and it's good to be here with everyone today. As Frank pointed out, the ALTA, working with members across the industry, agents, underwriters from around the country, talking to lenders from around the country, and some regulators also, developed what we've termed the best practices and the 7 pillars that make up the best practices. And I want to go through these, and in the next slide spend a little time talking about what's been going on in the background since these were published and where we are today. So the first best practice, the first pillar, talks about establishing and maintaining current licenses. Obviously the focus here is on state and local licensing and doing business laws in whatever jurisdiction your business may be located. And we move on and talk then about pillar 2, written procedures, and that's going to be a key throughout the best practices. Written becomes critical, and a little later on in the call we'll talk about why written has become such a catchphrase. But right now, for pillar number 2, we talk about written procedures and controls for trust accounts, and the focus here is those companies that deal in escrow and closings need to have and maintain separate accounts, and again, a focus on how those accounts are reconciled. In the third pillar, we talk about physical and network security, and really we're talking about protecting money and the confidential customer information. And this really has its genesis from Graham Leach Bliley, which really has been the law since 1999. And while in our industry it hasn't gotten a lot of play, it certainly has become a major focus of both the CFPB and the pressures that they've placed on their lenders with some of the decrees that Frank has talked about and the consent orders, as well as their concern for whomever they're doing business with, us, for instance, that has access to non-public information of the consumer. The best practice goes on to talk about clean desk policy, and I'm sure you've heard some of these catchphrases in the past, and having file cabinets that lock so you can preserve the privacy and protect the privacy of the information that's stored, as well as having proper disposal facilities to deal with information once it can be discarded. The fourth pillar talks about consistent pricing and refunding overpayments, and the need to record. And again, key here is that we should have written procedures that outline both pricing and recording procedures, as well as having published rates, even for those things that don't deal with the title insurance piece of what we're doing. The focus seems to be in an age which I think we could all easily agree has become the age of consumerism, protecting the consumer and giving the consumer as much information as possible, making what the consumer touches, sees, and affects them very transparent. And the focus here is to help us as an industry understand what some of the lender requirements are in making sure that vendors who service lenders' clients are doing it in a transparent way. The fifth pillar talks about delivering of title policies and reporting premiums. And one of the questions certainly that I've been asked through the last 6 and 7 months as we've talked about this around the country is, why would a lender be concerned about this? And the response is actually interesting and actually not that difficult. When you talk to lenders, the first thing they'll tell you, look, they're in the business of making loans, not of making claims. And they understand that documents, particularly their mortgage, needs to be recorded timely to ensure that the business that they're in of making loans is protected. And they talk about issuing the policy, and there's really a couple of things in the background that the lenders would like to talk about. If the policy isn't issued timely, or not reported timely, or not remitted on timely, the lender will raise a couple of questions. Sometimes it'll come in the form of, if the remittances haven't been made and the underwriter has outstanding liability, then the reserves have to be understated. And that's a concern for a lender, obviously, given what's happened in the claims in the last 3-4 years as we've come out of the Great Recession. Claims have skyrocketed in our industry, and in 2010 and 2011, payments exceeded $1 billion for our industry. Lenders went to school on what we do and what we don't do in terms of handling claims, and it was probably an educational period for not only us in the industry as we dealt with the problems that the recession foisted on us, but also our customers got to learn a lot more about the types of claims that get not only accepted and defended, but those that get denied. And one of the worst places for us to ever be is where a commitment has been issued, funds have been accepted, but a policy is never issued. And all of a sudden a claim is made, and the first response is, there is no policy. Nothing's ever been issued. Nothing's ever been reported. There's been no remittance on that policy. And lenders obviously are afraid of the bad press that leads to, because it typically focuses on the lender and not on us, at least initially. And again, in the age of consumerism, the lender is all about protecting that consumer. The sixth pillar, we talk about professional liability insurance, and we get down to E&O coverages, we get down to Fidelity, and it's pretty clear as we've talked to lenders around the country, and maybe some of you have seen some of the questionnaires that are now floating around. One of the things that appears on many of the questionnaires coming from lenders, in order to do business on a go-forward basis with this lender, or lenders that are using the questionnaire approach, frequently one of the questions asked is there coverage in place, and attach a copy of the coverage. They actually want to see the declaration page of the coverage that's in place from the entity they're doing business with. And then the final pillar talks about responding to consumer complaints in a timely manner. Again, having written procedures in place that allow the consumer, that allow our staff to know what they need to do when a complaint is logged. And it doesn't mean that we're always saying yes because the consumer has a complaint. I mean, we're all familiar here, and I'm sure you've all experienced this. A consumer calls and says, gee, my house burned down, I want to make a claim. And you simply say, I'm sorry, but you got the wrong insurance company. But you need to log that conversation. The CFPB has established a hotline. Consumers can call the CFPB directly now, as well as calling their lender, as well as calling their service providers, of which we are one. And one of the things that we need to do is make sure that we have a procedure in place that not only notes that the complaint was made, but that we've logged it in and that we've dealt with the complaint. However, the complaint was dealt with, and sometimes it's simple enough to say, it wasn't a valid claim or complaint against the title or the title insurer, and we referred them to another party. If you want more information about the best practices, you can certainly go to the ALTA website, and it's listed there on the screen. It's alta.org/best practices. I want to move on to the next slide, and we're going to talk about, and it's key here to note, 2.0. In late December, the best practices were published, and for purposes of this conversation, let's refer to those as 1.0. And recently in July, after over 6 months of speaking with agents, regulators, and agents from around the country, some revisions were made, slight revisions, but hopefully revisions that are meaningful and make the best practices even better than I think that they were when we first published them. The point, many points to be made here. One, the best practices were always meant to be ambulatory. They're a living document. They're going to change, and they're going to continue to be responsive to market needs. During one of our meetings with a group of lenders over the course of the last 6 months, one of the lenders acknowledged that piece of information relative to the best practices, and they were very pleased with it. And their comment, as they continued to talk about the need for change, said, well, you have 7 today. They were fairly certain within a 2-year period of time there would be a need to not continue maybe to have 7, maybe to have 9, but they felt strongly that maybe 1 or 2 of the best practices that seem important today would evolve and may not be important in the future, and that maybe 1 or 2 things that didn't exist today would be available and something that would become part of the best practices in the future. So they absolutely see the need and appreciate the fact that the best practices have been and are intended to be a living document and responsive to the marketplace and market needs as the market shifts and changes are made. And it could occur simply by changing the law that could put different requirements on us. And the fact that we now call it 2.0, a couple other things to keep in mind. In the original best practices, under best practice 3, we talked about doing background checks as well as credit checks. Well, in talking with lenders around the country, not all lenders, but certainly more than a majority of the lenders agreed that credit checks have become problematic because there's no clear line on how you use credit checks. And so some lenders have taken it out of their own standard. And we thought, well, if the lenders are unsure about the need for credit checks or how you use them, we certainly didn't want to continue to have them included in the best practices. So we continue to include the need for background checks in best practice 3, but we've removed, again in response to what we heard from the lenders, the need for credit checks. The simplified insurance requirements, again, that's best practice 6. We talked about it. Some lenders today, as we're sitting on this call, are using questionnaires and sending them to agents around the country saying, in order to do business with me, I need you to fill out this questionnaire. And it will go through a series of questions, and frequently one of the questions tends to be insurance. And so rather than try to identify what that should be, we've written the best practice so that it really is now focused on what the lender may require and or what may be included in an agency contract with any one of the various underwriters around the country. And then finally, on clarifying recording timelines, which is best practice 4, we added some clarifying language because it was it turns out that it was confusing to readers, and we hope that we've clarified the confusion here, cleaned it up, and made it clearer and easier to understand. With these changes, we've moved on to now what we have termed best practice 2.0, and that is the current newest and best version of the best practices. And on a go-forward basis, this ought to be the version that you're referring to. And with that, I'm going to turn this over to Dan Mennenow.
Thank you, Chris, and good afternoon, everyone. It's so great to see such a large number of attendees on our webinar today. This is such an important issue, so I'm happy to see such a large number of folks. I'm going to talk a little bit about the assessment procedure itself, and hopefully everyone has had a chance to look through the assessment procedures, but we've got a few questions that we hope to help answer. And the first one is, what is the assessment? The assessment is intended to be a tool for title companies to determine their compliance with best practices. Obviously, the lenders, as both Frank and Chris have talked about, the lenders have provided significant input to us, and they are very definitely looking for a consistent, uniform process of assessment of title companies and title agents. So this is why the procedures have been put together as they have. How does the assessment work? Well, a third party will review a title company's operations by following these assessment procedures and ultimately issue a certificate to the title agent or title company. And who will conduct these assessments? Well, any company that is acceptable to your lenders can perform the assessment, provided they are following these uniform standard assessment procedures. And because we have standardized these procedures, it does allow various entities to conduct the assessments. They could be done by your underwriter or underwriters. They could be done by a public accounting firm, by individual CPAs, or any other entity that, again, is following these procedures and whose assessment will be acceptable by your lenders. How often do I need to undergo an assessment? Well, they are intended to be done on a 2-year basis, to be updated every 2 years. Obviously, the intent here is to keep the intrusion into your business, the cost, and everything down to a very minimal level, so it is a procedure that can be handled easily and effectively by everyone. And if we look at the next slide, we have here an example of the assessment procedures addressing best practice number 1. As you will see in the left column, each of the procedures are numbered specifically. The center column details what the procedure is and how it's to be done by whomever is doing the assessment. And the assessment recap column on the right gives information in terms of what constitutes a pass or a fail. Certainly for best practice number 1, having all the appropriate licenses and registrations to be able to conduct business in your state is pretty straightforward and is either a pass or a fail. There are other sections of the assessment procedure that have a certain tolerance level to them so that there is some flexibility there. For example, for best practice number 3, assessment procedure number 3.02 addresses training of employees who have access to non-public personal information. Well, as we all know, particularly for a small title agency, it's pretty hard to train everybody at the same time and get everybody up to speed simultaneously. You shouldn't really be shouldn't fail this because you don't have all of your people up to speed on the training. So you can have up to 20% of your employees who have not completed or have been trained and still be able to pass this procedure. As you go through the procedures, you will see there are many components of them that you do have some flexibility in how these are done, and it is detailed out very nicely in the assessment recap column. And with that, I will turn it over to Cynthia to talk about the certification package.
Thanks, Dan. Okay, so I want to, again, thank everybody, as everybody's been doing, for allowing us to present this webinar to you today. I hope you find it helpful. So I'm going to talk about the certification package. It's fairly simple, actually, the package is. After the lengthy assessment and all of the work that will go into that, the certification is somewhat simple. It's a 3-part product, and you'll see that the first part is an open letter to customers, and customers can be either lenders or your if you have realtors who you consider your customers and you want them to see this. If you have specific consumers who you want to see this, it's an open letter to your customers that will describe essentially and certify that you are that you have been certified as been assessed as part of the best practices. The second part is the certificate the actual certificate that will come from the assessing entity. And you'll see, let me see if we're going, have we moved to the next slide yet? No, yes, okay. So you'll see the first one, and I'm sorry, I'm going to go back and just tell you, the first one is the open letter. So this would be printed on your letterhead, and you'll update any references that show on there that it references to company, to your actual company's name. And it will be, again, an open letter to your consumers or realtors or lenders, whomever your customer to be, that you're representing that during that period of the 24-month period after the assessment, that you will remain in compliance with the best practices. And then it assumes that you'll attach a copy of your certification to the letter, and it can, of course, go out to as many customers as you wish for it to go. So then back to the second part, which is the actual certification. Can we jump to the next slide? There we go, the certificate. And it will be from the company that conducts the assessment, whatever that company is. And I know Dan spoke earlier about the variety of companies that may be able to conduct these assessments, and whether or not it's a auditing agency, or whether or not it's an underwriter, whomever decides to do it, whomever your lender agrees, or your consumers or your customers agree to accept as the certifying entity, from that company that conducts the assessment to your company. And it's in two parts. The first part is the information and security and privacy pillar. So two parts of that. The first will be that pillar, and then the second will be everything else. And like all audits, it's not intended to be relied upon by anyone except your company. Now, you'll attach a copy of the certificate to your open letter, but the certificate is issued to you by the assessing entity. And again, there's a copy of it up on the screen, so you can see the example there. So it would be issued to you, your company, and it will discuss, as you see, it will say that your company performed the assessment, and it will give the date, and that as of that date, that you are in compliance with, and you'll see the first part is the 6 that are not dealing with privacy and information security, and then the second part is privacy and information security, so that you can essentially be assessed on just the 6 that are not privacy, information security, or you could be assessed on just the privacy and information security if for some reason there was a reason to break that out. And then you have your grade, your pass, hopefully you have a passing grade at that point. The final piece of the certification is your insurance information. And I believe it was Chris that talked earlier about the companies that are going to be requesting, if they haven't already. And I know in my practice, most of my lenders require a copy of the deck page already. But in the event they don't, they will be going forward. So a copy of the declarations page of your E&O or professional liability insurance, and also evidence of any other insurance, if there's a surety bond, if there's a Fidelity bond, if there are any of those other types of insurance that you maintain as part of your compliance with best practices, or as required by statute or regulation in your particular state, that evidence of those types of insurance would be the third piece of the certificate. And I think that that's it for the certificate. So I'm going to turn it, I believe Steve is going to talk about the workbook, which has been recently completed.
So thank you, Cynthia. In ALTA's ongoing effort to continue to provide our membership with valuable tools to help them implement and implement the best practices into their organization and help them prepare to show their implementation to their lending customers, we are recently and actually today are going to be releasing an exciting new product to the membership to really help companies get prepared for these assessments, and it's called our ALTA Best Practices Assessment Preparation Workbook. The workbook is, if you think about it, the assessment procedures is the test. It's the test for helping to determine whether or not a company has the best practices in place and can prove that it has adopted all 7 pillars of the best practices. With that analogy in mind, the assessment preparation workbook is really like your study guide for the test. It is a tool to help title companies easily digest the best practices and the requirements of the assessment and help them understand and rate themselves to determine their readiness to undergo an assessment to undergo an assessment. It also helps provide and really helps digest and break down the requirements of the assessment and the best practices into individual components that are hopefully designed and intended to be drafted and written in a way that helps make them much easier to understand than really some of the higher level thoughts of the best practices. And so if we can go to the next slide, we're going to actually look at a sample of what the workbook looks like. And this is a sample of the workbook for the first best practice on licensing requirements. And you can see it's written in an easy question and answer format. It has questions that you answer either whether or not you have that procedure in place. So if you have a procedure, and as question 2 here says, to determine what your licensing requirements are, you would answer that question with a yes. And then if you actually have that written in your so you answer a question with a yes or no, and then you'll notice in the third column it says control or procedure not documented. This is a question that's designed to determine whether or not you actually have the control written in your formal written procedures. And then lastly, you have a fourth column which is designed to help track whether or not you actually can showcase to a potential assessment firm whether or not you have evidence showing that you actually follow your written procedures. And so it's a simple tool to help kind of review your company's practices, current practices, and help determine what you might need to work on to get ready for a best practices assessment. If you go on ALTA's website at www.alta.org/best practices after today's call, you'll actually be able to, as a member, download the first chapter of the workbook on licensing, which includes 10 questions, 5 of which you can see here, and some more that are not available. And it will, and you'll be able to actually start the process of going through this workbook. We're releasing the workbook in chunks to the membership to help make it easier for companies to be able to actually go about actually reviewing the questions in the workbook and answering them, and starting the process of working on fixing some of the results that might need to be fixed so that you can get ready for an assessment. So we expect to be releasing the rest of the chapters of the workbook throughout the month of September, and we'll hopefully have them and expect to have them done by the end of the month of September. Along with the workbook, ALTA is in the process of developing another exciting new product that I wanted to mention today, and that's our Policies and Procedures Drafting Guide. This is a tool that will, similar to the workbook, present a series of questions to a title company. And the idea is, and the concept is, by answering those questions and taking some help from the guidelines that we'll be producing, that the title company will be able to actually answer and write their own set of written policies and procedures that are really of that type that lenders are looking for. Now, folks have asked us, and why have asked us, if ALTA is going to be producing sample policies for companies to look at. And that's something that we are very much in favor of being able to do, to help provide as much guidance to title companies so that they know what a proper set of policies and procedures look like. But as we've talked with our lending customers and as we've talked with agents across the country, we recognize that just producing a set of samples and putting them on the website so that anybody can just copy and paste those samples into their own set of policies and procedures is not really what's in the best interest of any single company, and not in the best interest of the industry as a whole. We hear from lenders that they don't want the kind of cookie-cutter policies that you can get from looking at just a sample document. And they really want a set of policies and procedures to be crafted to fit each company's what those individual companies do in their day-to-day business. And so with this tool, you'll be able to tailor your sets of policies and procedures to really fit your business model and your business practices across the country.
Steve, can I jump in here for 1 second?
Yes.
And I would just sort of say, with regard to that, that's a really good point. With a lot of these things, there's not one correct answer. It's the way that you do it. And you have to think in terms of, when you are assessed, it's very, very likely that the assessing entity will also interview your staff. And if you have just taken a policy off the website, stuck your name on it, and put it in a book, and not incorporated into the way that you do business and trained your staff on it, then you could likely fail that that aspect of the assessment, because your staff would say, we don't do it that way, or we don't know how to do it that way. So that's a really good point, that policies and procedures don't have to be so formal. They really just need to be the way that you're doing business, and then but reduced to writing so that it's clear and everybody can see, and that your staff knows how it's done.
I think that that's a great point, Cynthia, and something I think folks will hopefully be able to make it much easier to reduce everything to writing with the policies and procedures drafting guide that I mentioned, which we expect to release in the month of September.
Exactly.
Other tools that ALTA has available for assisting our membership are available on our website at www.alta.org/best practices. This includes all of the documents that we've talked about today, the best practices themselves, the assessment procedures, the certification, the workbook, any of the recorded webinars that we've produced over the last 6 to 8 months, including today's webinar, will eventually show up on that website. Along with the website, every Thursday you should be receiving a special Title News Online edition that's related solely to ALTA's best practices. In fact, today's edition should be hitting your mailbox probably as soon as the call's over, and will include information about the workbook that I mentioned today. And then lastly, I just wanted to talk a little bit about what you can be doing right now. As we mentioned, everything working today is trying to get you ready to be able to showcase that you're able to meet the assessment, and to help a title company prepare for an assessment and prepare to continue to keep that business with their lending customers. The big question that we continue to hear is, well, when are lenders going to be requiring every title company they do business with to have undergone a best practices assessment? And that's still a question that's up in the air right now. And so we suggest that you should, first and foremost, as you're thinking about how you can integrate the best practices into your business operations, you've got to be talking to your lenders. You've got to be talking to them about what expectations they're going to have for your company, and what expectations and timelines they're thinking of related to adopting these best practices. But while you're waiting and having those conversations with your lender, it's never too early to start to get the culture of compliance into your operation. So take a look at the workbook as we release it over the next few months. Start to try to answer those questions, and where you have gaps in your procedures and need to start to adopt and need to start drafting more formal written procedures, start to set deadlines for that, and start to set staff in your operations who are going to be responsible for meeting those deadlines. You can also, again, help prepare and start to talk more with your lender about what types of entities they're looking for to have assessments, to conduct assessments, and begin to start talking to potentially those companies to see if they will conduct assessments for you. So that's hopefully just a brief overview of what's going on with ALTA's best practices, the assessments, the certification package, and our member resources that we're releasing. And I think Jeremy is going to take over now, and we're going to start seeing if you guys have questions.
Yeah, thank you, Steve. Questions have been rolling in during the presentation, so we will try and then get through as many as we can in the next 10 or 15 minutes. And as we're answering questions, if you do have something you would like to ask the panel, please submit them via the chat box. We received a lot of questions along the lines of when do I need to do this? When do I need to get certified? When should I do an assessment? Any of the panelists want to touch on timeline?
I think and this is Steve Gottheim from the ALTA staff, I think probably the best answer to that question is it's really going to be up to the lenders that you do business with, and that's why it's important to continue to start the conversation with them now about what their expectations are. We're hearing from some lenders that obviously they're undergoing a number of regulatory changes right now in terms of having to adopt new rules related to the qualified mortgage rule and the soon-to-be released new mortgage disclosure forms. And we keep hearing that there might be some way to implement kind of changes to this process, to the best practices and getting best practice certified along with them redoing their systems for the rest of the TILA mortgage disclosures. But it's going to be up to each lender individually about when they expect you to be best practices ready. So I would start that conversation today.
Okay, thanks, Steve. And there's also been a lot of questions, and Dan touched on it during his part of the presentation about who can do the assessments and who are the companies out there that title company could seek out. Any input that you guys could provide on this?
Yeah, let me take a shot at this and at least, hopefully put forth some of our thinking as we went through this. And let me start with some of the comments that we got as we met with lenders. And there were many agents in the room as well as underwriters when we spoke to some of the largest lenders around the country. And a couple of the comments we got were, whoever does the assessment needs to be a company of substance. And when we drilled down on that a little bit, they wanted to make sure there were deep pockets there. We had a couple lenders say they would prefer underwriters not do this assessment because they viewed underwriters as having a conflict if they performed the assessment. So as we thought about this, we thought we would try and craft a situation where the assessment could be performed by the underwriters if the lenders were willing to accept that. It could be performed by outside accounting firms if the lenders were willing to accept that. It could be performed by third-party companies that maybe we haven't identified yet that might believe they have the expertise needed to perform assessments, again, if lenders would accept that. What I can tell you, and so that was kind of the background, and one more theory that went into this is the broader the field, we felt, if we made the assessment process broader in terms of who might be able to perform it, it would be helpful in keeping costs down, because obviously this is not going to be something that comes, won't have a cost attached to it. It's something new. It's going to require some expertise, and we were concerned about the cost that might be associated with it. But going along the same line, what I wanted to caution everyone is lenders today are performing audits. It's going on as we speak. There are some agents around the country that have already been audited. There are underwriters, my company being one of them, that has undergone an audit, actually several audits. Lenders are taking this know your vendor very seriously, and in between some of the things Frank talked about, whether it dates back to 01 or 06 or in the most recent memo from 2012 or part of a consent decree that occurred in 2011 and then a second consent decree, the lenders understand they now are responsible and have liability. And so the best practices are to help all of us, agents and underwriters, make sure we've got the tools in place to keep our businesses relevant and responsive to what lenders need today. And the audits that we are undergoing and the audits when I've talked to some agents around the country that they have undergone include things like clean desk policies, include things like security for the files, security cameras, key card readers, and making sure that where files are kept are not easily accessible to the general public. And these things are in common. Didn't make any difference whether they were auditing an agent or an underwriter. They were looking at the same things. And they're looking for written policies and procedures. And we've had to, as agents that we've talked to around the country that have been audited, had to do, is be in a position to produce copies of their written policies and procedures outlining what they have in place to address the lender's concerns. And the good news is we have done a pretty good job as an industry of outlining them in our best practices. So Jeremy, I don't know if that's responsive or more than what you're looking for, but hopefully at least it gives us all something to think about.
Jeremy, I see we've got 5 more minutes until the top of the hour. Do we have any other questions that have come in?
Hey, Steve, I apologize. I muted my line. Yeah, we got about 5. Well, we can go over a little bit since we got a little delayed start. But another common question that we're getting is, what about providers to the title insurance industry, such as data, tech, search firms? How do the best practices apply to them?
Well, let me talk about the easiest one, and that's the notaries. The lenders certainly expect us to make sure that notaries we're using are doing the very same things we're expected to do. And I think that would probably provide, really trickle down to any provider, particularly if the provider has access to non-public information.
Yeah, I mean, I think I saw something that maybe might have been from the CFPB that said even though you outsource the work doesn't mean you outsource the liability.
Right, exactly. It's the same message they give into lenders. If you use a third-party provider, you still have the liability. And I think the lenders are saying to the people that they're outsourcing to, and if you're outsourcing, you can't outsource your liability or the responsibility that I expect of you.
Right.
Another common instance that you should look at are your messengers. Messengers typically carry documents and copies and funds and other important aspects of the closing, and you'll want to make sure that those messenger services are insured as well and covered under the same for the same activities that would be covered for directly.
Yeah. Thanks, guys. Cynthia, you might be able to address this question from Molly, and her question is about, she's with a law firm in South Carolina and wants to know about compliance with the licensing pillar. Specifically in that state, I guess they don't have to be licensed as a title agent, so how would they go about meeting the requirements under that pillar, or would that really not apply to them?
Well, you do have to be licensed as a title agent. So you have to be, whoever is writing title must be licensed with the South Carolina Department of Revenue, and and all of that should be current and in effect. I mean, as far as the rest of it goes, it's, you're licensed as an attorney. Keep your license current, obviously, your CLE requirements and all of that, and then business licensing. Those are the primary things that we have to deal with.
Okay. Thank you. I think I misspoke. She asked that there's an exemption for attorneys.
An exemption for attorneys in a licensing requirement?
Georgia law provides a specific exemption for attorneys and does not require attorneys who write title insurance to be licensed as insurance agents.
Oh, and that's Georgia. I'm not familiar with that. I'm South Carolina.
Yeah,
so
sorry.
So presumably, but my response to that would be, because there's other states that have maybe similar things. If that's an exemption in your state, and you're allowed to write title insurance by virtue of your law license, then that's going to be something particular to your state. So you're not going to have to provide your license as a title agent. You're going to provide your law license as evidence of your compliance and with the licensing requirement. Yeah, presumably, you're authorized by certain underwriters, so you may offer whatever your authorization letters or whatever it is that permits you to write for whatever particular underwriter that is.
Okay. Thanks, Cynthia. Molly, I apologize for butchering your question. Randy has a question about the certification, and wondering if you could provide any insight on the thought of the bifurcation of the certification and breaking out the privacy and information security into a different part.
I think it's been recognized that that third pillar is going to be the most difficult one to comply with, and the certification document itself is essentially already bifurcated. The 6 pillars, with the exclusion of number 3, are listed along one side, and number 3 is listed separately. The reason for that is the acknowledgement that, and incidentally, that acknowledgement exists also within the lending community. So the acknowledgement is that some of that network security stuff could pose a very large hill to climb for many small companies. So the idea is to obtain certification for the other 6 pillars, leave number 3 alone for now, and then you can get back to it at some later date. Now, of course, a lot will depend, as Steve suggests, upon conversations with your customers, and if you're in a community that needs your services and you're well established and all other things are lining up, your lending customers may feel that compliance with the others is appropriate at the outset, and you can get back to number 3 later on. If that's not the case, once again, conversations with your customers are required, and your action should be guided by those discourses.
Okay, we're at the top of the hour. We'll try and squeeze in a couple more before we conclude today's call. Linda says that agents have multiple underwriters, various lender customers. Any suggestions on how an agent can avoid being subjected to multiple assessments and satisfy various customer requirements?
Well, the idea, this is Frank again, the idea of certification is that you're certifying, you're creating your letter of certification, and you're retaining the services of an individual or entity who's going to perform that certification. That certification is being conducted against an assessment framework, and that framework is the same whether one underwriter does it, or another underwriter does it, or a third party entirely does it. So once certified, you're certified.
All right, thank you. Ryan had a question about what percentage of ALTA's member companies are smaller shops. Dan, ALTA's annual agent survey has some data, and I think that shows about, was it 65% of agents are small operations?
That's correct. 65% of the agent members are, I believe, companies that have an average of 3 or 4 employees. So these are a pretty significant number of our members are definitely the small title agency.
Okay. There you go, Ryan. Steve, maybe to wrap up, we had a few questions from people who were curious as to what is available to members and what is not. Could you explain that again real quick?
Sure. So of the resources that we have on ALTA's website, really the big one that's available right now only to members is going to be the workbook that I mentioned earlier. So as we release this workbook over the next month or so, each of the chapters related to each of the best pillars will only be available for access to ALTA members. Other resources that we have on our website, including some of the webinars, some of these other checklists, and other resources are available by mix. Either some of them are available to non-members, and some of them are available to members. However, all of the main best practices framework, the best practices themselves, the assessment procedures, and the certification program, or certification packet, are all available to the entire title community, regardless of ALTA membership.
All right, thank you, Steve. We've come to the conclusion of today's call, and again, I apologize we didn't get to everyone's questions, but again, you can send us an email at bestpractices@alta.org, and we will try to get to those as quickly as we can. As a reminder, today's presentation will be available for download, and you can go to our alta.org/best practices page to access that. Looking ahead, we've scheduled many professional development sessions dedicated to best practices at this year's annual convention, so I encourage you to go to ALTA's website to check out the schedule and to register. And with that, I hope all the listeners found today's presentation helpful. And take care, everyone.